Hey, good morning, everybody. Hello. Welcome back to another Wealth Coffee Chat, or Jason, welcome back anyway. Had a little bit of time off, folks. Hope you're all well. Was nice to take a little break. Well needed, middle of the year. Take a little rest and then get back to it. Morning to you. Good morning, James. A few of the regulars here, which is awesome. Morning, James. Someone behind the veil, not Facebook user, in the Facebook groups. Good morning, whoever that is. Jeff, g'day, mate. Howdy. Good to see you, buddy. And hey, Courtney, there you go. Oh, that's fantastic, Courtney. Well done. Awesome. Well, I'll do the quick warm-ups while things are going on. A few little technical difficulties this morning. Haven't done it for a week, and now, bits and pieces, bugs in the machine, trying to get things back on track. But, we shall forge forward. Good morning, Aaron, Adrian. Fantastic to have you here. Thanks for joining. If you don't already know, most of you do. But if you're new, if you're wandering along and you've accidentally found us somehow, or you've joined our mentoring and coaching program, we usually have a fair few people joining every month. Well, welcome. Jason Witten's my name. Welcome along to the Wealth Coffee Chats. What do we do around here? Well, each morning we try and get together around about 8:10. If I can get the technology to behave itself, we usually start about 8:10. And what do we get up to when we have this Wealth Coffee Chat? Well, both you and I know that the media doesn't mind talking a bit of rubbish, a bit of bullshit about things, half-truths or exaggerations, especially when it comes to real estate. Everyone has an opinion, and not many of them are worth listening to, let me tell you, folks. So we try and make a bit of sense of that. Let's be honest. Let's be frank. Many people will tell you how to do things when they've never done it themselves, or are not wealthy from doing it. So many people listen to the media, accountants, finance brokers, friends, family. Oh, don't do this property investing thing. It doesn't work. Somebody ripped you off. A real estate agent always confounds me that, you'd listen to a real estate agent about your wealth when you wouldn't listen to, a coach or mentor. I've had coaches or mentors all my life from the age of 19, actually even earlier with my sport. And I think really at the end of the day, you've got to be careful to who you listen to. Well, a little moment there as we're going along. So that's what we get up to, folks. We try and make some sense of what's going on in the world of investing. Matter of fact, in the world of media when it comes to property. And, we try and get on with it. As we know, there's a couple of sayings around here. If you're new, well, say hello. Two things you got to remember. This thing's a marathon, not a sprint. It takes time to build a property portfolio properly, residential, buy and hold. Simple way of saying that is buy well, do not sell. Buy a good property and keep it, folks. That's the point. You would think that would be pretty straightforward and simple. Unfortunately, sadly, it's not. And I've spent my last 20 plus years coaching property investors to buy their damn properties and keep them. Now, it's certainly way harder than it sounds. I've had a few challenges along the way, and I've had to sell a couple of properties and then start again. Self-inflicted, by the way. One or two stories one day I can tell you when we've got a bit more time, but that's the drill. That's the drill. Buy good properties. Keep them for as long as you can. Make sure you take care of things at home with your finances in your budget, and those properties will take care of themselves if you look after them. Anyway, let's talk about something that's going on. Who remembers the mortgage cliff? Who remembers the mortgage cliff? The mortgage cliff is coming. Mortgage cliff is coming. The world's going to end. It's over. Look at all these people coming off a fixed rate. Well, folks, we're pretty well in smack bang in the middle of this mortgage cliff thing, and the world's not ending. Oh yeah, funny that. Who remembers it? Who remembers some of the dramatic headlines? Anyone got any funny remembrances? Yep. At the end of the day, the media aren't here to help you get wealthy or rich, folks. They're here to sell newspapers or get your attention so they can sell advertising, really, at the end of the day, but along the way. So let's dive into today's chat about the mortgage cliff. What's going on? Where are we right now when it comes to the world is ending? Everybody's going to roll over and, have a problem. Well, that's not happening at all. It's matter of fact, the opposite right now. But let's have a look at some of the info, some of the data. Now, shout out to Tim Boyle. He's a good buddy of mine, and he's always got great graphs. I don't know where he gets them from, but I get them from him sometimes, and plenty to talk about here. We're right in the middle of a large time where it comes to people coming off of fixed interest rates. Some people fix their interest rates quite low. Well done. Put it in the chat. Tell me, folks, in the chat, what was your best fixed interest rate if you fixed an interest rate in the last few years? Because I know there's a few people out there was sub 2%, in the late 1%. Tell me what you got. And I'm quite jealous of that. I didn't get a chance to 2.99. Perfect. Courtney, 1.89. Wow. That's so good. So good. Free money, folks. Do you guys realize that was free money in comparison to inflation? The cost, you were actually getting paid to get a loan. Let that sink in. 2.89 due to expire next year. 2.85 still on it. Well done, folks. That is brilliant. Now it doesn't take Einstein or a mathematical genius to work out when you come off of 1.89 and you go to 6 or 7. Things might be a bit hairy, right? Thankfully, if you're an investor, in the meantime, you should be putting your rents up now, folks. And if you're still on 2 or 3%, you will be positive cash flow, especially if your rents are up. What are you doing with your money? Excuse me. What are you doing with that extra cash flow? You're putting it in your offset account, folks. You're squirreling it away for the future to cover some costs, because there'll be a balance out, and don't be spending that now. Don't be going on holidays or buying a damn jet ski or a camping trailer or a caravan, because that's not your money. That's your property's money. Anyway, bit ranty today, all built up. What's going on? Fixed loan expiry over the next little bit. Has the world ended? Well, no, it hasn't. All right. Interestingly enough, there's some data from RP data. RP data's not bad. I don't mind RP data. You got to just cross-check them a bit. They do a little bit of funky stuff. But the decade average, and what they're saying here, is based on monthly new listings inferred. Now, inferred, that's like a best guess, so best guess. And why do they say best guess? Because they cross-reference it as a rental. Like it's being sold to rent, not to, owner-occupiers with a rental in play or whatever it might be. Anyway, the idea that the number of listings has gone up in, which is inferred as investors selling their properties. Okay, investors sell, and then media got hold of this. Oh, decade highs. It's the highest it's been for a long time, or whatever it might be. Probably back here in COVID as well. The media and also, other commentators would like you to think and feel that's a problem. That's a disaster. But what's really going on? Let's check out the facts. Just because a percentage of listings are high doesn't mean that overall the full number. Well, that's true, Alison. You're dead right. You're dead right. You took the words right out of my mouth. A lot of investors are going, I bought a rubbish property. Anyway, those people who are selling those investments, sometimes, quite often, are good time Charlies and or upgrading. Alison's right, because for many of us, if we had a property we knew we should have gotten rid of, or knew we should never have bought in the first place, maybe not a bad time to ditch it and get a better one. All right. But what's really happening here, folks? Have a look at the actual housing supply on the market, right? And if you look at the market in months supply, and it doesn't matter which way you slice or dice this thing. If you go and have a look on, SQM Research, you go and have a look on realestate.com, the number of properties and the months of supply versus demand is still out of whack, right? The properties available, there's not enough for people to buy. And more importantly, not enough good quality things for people to buy. Often those properties are a little bit average. The combined capital cities, 1.6 months worth of supply. All right, 1.6 months worth of supply. That is not a lot. Usually that tracks at 3 to 4 months, maybe even higher. For all of us, depending on where you're shopping, you might be in places like Brisbane and Perth. That's very competitive. Sydney's in the middle. Even at sort of 2 months, Melbourne is still not oversupplied in any way, shape, or form when it comes to the number of listings available out there in the marketplace. Still well below 5-year average gaps. Narrowing a little bit for us, but really at the end of the day, what does that mean to us as property investors? Is anything happening that we need to pay attention to is really the conversation. Yes, mortgage cliff is in the middle of whatever. I don't know. I wouldn't call it a mortgage cliff. I'll call it a mortgage reset. Is there a problem? Are people selling all over the place, going broke, living in the streets? The answer is no, right? The media wanted us to feel and think that, which was rubbish. What's really going on? Well, the supply is still low. The buyers are out there. And right now, we're buoyed. The market's a bit excited because it's had a bit of a pause in interest rates. And buyers are certainly keeping up with the pace of the supply of maybe a few more properties on the market, right? There's a rise in buyers because what happens, do the people who want to buy and own a property just disappear? You go, okay, let's say there was 1,000 people 1 week and then, something changes, like interest rates go up. Do they disappear? They go, that's it. We're never going to buy again. No, they wait, they sit, they go, okay, well, maybe we'll chill out for a moment. There's still buyers in the market ready to come back out, and it's gonna continue to keep the supply in check, or the demand is going to be more than supply for the moment anyway, folks, as we look. So let's have a bit of a look at what's going on. Is this mortgage cliff causing any grief anywhere? Well, no. Vacancy rates are still extremely low. Have a check out this. I read this article on the weekend. In many places in New South Wales, these are the top 10 areas where rental premiums, someone's asking, let's say $1,000 a week in Hunters Hill, and people are offering 20% more, as we go along. Now, this is quite good to see that in many places, especially, places in high demand with lots of limited supply and lots of demand, prices are still going up more than the asking price for rent as we go along. So for me, for you, there's nothing in these stats to be concerned about. What's really happening, folks, is a lot of people are refinancing. All right, refinancing across the country is underway. Who's making money out of refinancing, folks? Who's getting wealthy out of this fixed interest rates and then refinances? Who makes the dough? Put it in the chat for me. Who's posting billion-dollar profits right now and loving it? Who's doing it? All right, the banks. The banks are getting wealthy. And you know what? At the end of the day, Australia has a pretty stable banking system. We're in the top 3 banking systems in the world when it comes to stability. So I suppose we should be grateful for that. At the end of the day, I think they need a little bit of keeping an eye on. That is for sure. So banks, they certainly are making plenty of dough. What's really going on is people, the smart ones, are refinancing. They're putting their rents up, folks. You put your rents up, lock in those rent rises as soon as you can, and take care of that coming change in your loan payments. If you're on a 2 or 3% interest rate now, you should be squirreling every cent away, okay? And that property should be covering its own cost. And if it's not, then reach out to your coach and your mentors and get that sorted. And certainly with you as the investor, cash back or getting your tax back against that property, if it's a newer property as well, that'll help a lot too. So, people are refinancing. But here's the drill. Here's what's really lining up right now, team. And it's something we're going to sort of cover tonight at mentoring, actually. So make sure you get yourself registered for tonight's mentoring. The interest rate rises have paused for the moment. There may be 1 or 2 small ones before the end of the year, but that will be it'll be irrelevant in the scheme of things. Not irrelevant completely, but irrelevant in the scheme of things in comparison. Another 0.01 or a 0.2 rise in comparison to 12 rises in a row will be irrelevant to the cost of things. All right, we're done. We're here, folks. Most economists, most smart people, anyone with half a brain is seeing the info and going, "Yep, here's where we are. We've reached the top of it. The world hasn't ended, by the way, and it's not going to." And what's in the future? Well, most of you guys know that there is limited supply in the future. There's rising rents. And what comes after? What happens, folks? What's going to happen when interest rates go down a smidgen and there's low supply and large population increases in Australia? Tell me, what's going to happen? It's on the board. It's on the screen right now. What are we in for over the next 2 to 5 years when it comes to the world of property investing? All right, tell me, because for me, for you right now, we are ready to do the next bit in the cycle. Right, we've had our little quick trip around the property clock. Things have been reset for 6 to 9 months, and we've laid the stage for the next cycle. Folks. And you can see here, there's a pretty significant forecast across a few sources showing, hey, listen, we've got capital growth across most of the major capital cities. Lock yourself in, folks. Melbourne, Perth, Sydney, Brisbane, Adelaide. And why? Because all of these facts, all of these numbers, all of things are lining up to make this a reality. And tonight, make sure you come along to mentoring tonight, because tonight Sam's going to show you some things about the new world of construction and the old world of construction, and this opportunity, this gap of opportunity that is around for a few investors who are ready to roll at this moment in time. So there you go, folks. Anyway, back at it for Wealth Coffee Chats. That's it this morning. Is the mortgage cliff ending the world? The answer is no. We all knew this, didn't we? We all knew this. We've talked about this for ages. Those who can't afford it will sell. That is, and it's a shame that you might be in that position if you really desire to be a property investor. I know people now, and this is, some people get cranky when I say this, but I know people now, I know young investors now who've sold their cars, moved back with their parents to keep their investment properties. That's the sort of commitment that sometimes you have to do, right? It's not all hot air and it's not all roses and caviar and champagne and lollipops. I don't even know if that's the way to say it, but sometimes when you want an outcome, you got to be prepared to go the distance, and sometimes it's easier and sometimes it's harder. And I've done it. I've lived with friends. I've lived with family. We've skimped. I've sold my cars to get the outcome. Anyway, done today. Coffee Chat's done, folks. Back at it. Join me tomorrow. We'll do it again if you're up for it. Let's get back on the Wealth Coffee bandwagon. Come and hang out tomorrow if you want, around about 8:10. We'll do that again. Always leave me a comment in the chat if you want me to sort of cover anything or talk about a subject. Always happy to do that, folks. Great to have some feedback about what's on your mind. But until then, ladies and gents, I'm trying to get Fenton back on the wagon for Wealth, Wine and Wisdom. We're lining him up, folks. And yes is the answer. We're going to be back with Wealth, Wine and Wisdom as well. So there you go. He's just back from Poland, actually. All right, folks. Well, that's about it, I reckon, for today. You guys be good, be well. Remember, this thing's marathon, not a sprint. Takes time. Buy a good property and keep it. Buy well, don't sell. All right, that's it. Adios. Bye.